Well, hi everybody, welcome back. We're taking a look now at an alternate version of exercise 9-8 on page 427 of the textbook, chapter 9, reporting and analyzing current liabilities. This is a cumbersome transaction as we look to record a payroll transaction for a company. So it says the following monthly data is taken from Ramirez Company as of July 31st. Sales salaries of $640,000, office salaries of $128,000. Federal income taxes withheld on those salaries of $192,000. State income tax withheld also on these combined salaries of $43,000. Social Security taxes withheld $47,616 on those combined salaries. Medicare taxes $11,136 on the combined. Medical insurance premium of $15,400. Life insurance premiums of $12,003. Union dues deducted $8,400, and salary subject to unemployment taxes $69,000. The employee pays 40% of medical and life insurance premiums. Wow, there's a lot of information here. Well, first let's realize, as the Learn Smart module said, that when companies pay out their employees their salaries, employees don't take home that full amount, do they? No, they have to pay taxes. In this case, these employees paid federal taxes of $192,000, all based on their various tax brackets. The state income tax was $43,000. Now, Social Security taxes were withheld as well. And what are Social Security taxes all about? Well, that's that dynamite retirement plan all these employees are going to be entitled to once they turn of legal age. They'll be able to retire because they're putting money aside now for this dynamite luxurious retirement plan that Uncle Sam's going to fix them up with, right? That's what Social Security is, right? Of course it is. So you're putting money away now for this great retirement plan later on. Also, Uncle Sam has this idea that, well, not only are we going to take some money now so you can have this great retirement plan later on, how about if you put some money aside now for this luxurious health care plan when you retire as well? Well, that's what Medicare taxes are funding, that luxurious retirement plan when you retire. It'll all be taken care of for you. Now, there's some other things that are coming out. I'm being a little tongue-in-cheek here, I know. There are some other expenses that are also coming out of these employees' combined paychecks. Employees likely have a need for current medical insurance. And it says that $11,136 was the combined total premiums for the period for these employees that were on medical insurance. There's another really important piece of information. It says that employees pay 40% of the medical. So they don't have to pay the whole portion. They pay a portion of that, and then the employer pays the other portion, the 60%. Okay? Now, employees also have life insurance premiums of $12,300. So if there's a death, if they happen to pass away, they'll have a policy that'll pay out to their heirs, to some assigned beneficiary, for whatever the policy is. We don't know those details, but we know they'll receive some money, and these are the premiums for that life insurance policy, $12,300. Many companies are unionized, and to be a part of the union, employees have to pay union dues so that they can elect their union representatives who can barter and negotiate on their behalf. And this company, employees together were paying union dues for the period of $8,400. Now, the salary subject to unemployment taxes, that's nothing that's coming out of the employees' checks. Who's taking care of paying these amounts for their unemployment taxes? Well, that's going to be paid by the employer. They're going to be paying a tax, but it's going to be capped at $69,000, and we'll come back and look at that in just a few minutes. Okay, so we've got a lot of information here. Let's start breaking it down. So let's first use the information above to complete this table here. And this table is going to give us the breakdown for the medical insurance premiums and the life insurance premiums on what portion of this premium is going to be paid by the employer and what portion will be paid by the employee. So for medical, $15,400. Remember what portion employees are paying? They're paying 40%, so 40% of $15,400 means that the premium portion being paid collectively by all the employees that have medical insurance, will be $6,160. But the total premium's $15,400, employees are paying $6,160. Who's paying the other portion? Well, that would be the portion paid by the employer. or $9,240. For life insurance, the life insurance total premium was $12,300. That came directly up from the data. Again, 40% is paid by the employee, or $49.20. The balance paid by the employer. So these will become really important as we get into the next step. The next step is we're going to prepare the journal entry to record accrued payroll, including employee deductions for July. So there's going to be a lot of data here. Now, the first thing we're going to take is the amount of the salaries. Those are direct expenses to the company. And they're direct expenses calculated on hourly wages or annual wages prorated for the month. Whatever the method is, that entire amount is a direct expense of the employer. So expenses for the employer gets debited. So we're going to debit sales and salaries expenses for $640,000. Well, the office salaries were $128,000. That's also a direct office expense or office salary expense that's going to be coming out. But now we have to figure out, well, the employees aren't getting all that money now. We have to withhold those different amounts that we just discussed. So first, let's withhold from the Social Security taxes the amount that was listed. And it says Social Security taxes were how much again? Well, that was the $47,616. There were other withholdings that are coming collectively out of these employees' paychecks. The Medicare taxes for $11,136 were coming out. The employee federal income taxes were coming out too, of $192,000. State income taxes of $43,000. And all of those are being put into a liability account for their particular purpose. This is going to the Social Security Department. And so a Social Security taxes payable is created, an amount being paid in the future to the Social Security Administration. Likewise, Medicare taxes payable in the amount of $11,136 is created. That's an amount going in the future to the Medicare Association. Employee federal income taxes payable, a payable of $192,000 will be created. That's going to be forwarded in the future to the IRS. State income taxes of $43,000 payable created, because that's going to go in the future to the various states to whom those taxes belong. Employee medical insurance payable, $6,160. That's going to go towards the total premium that has to be paid for employee medical insurance. Life insurance the same for $49,200. Employee union dues, as we saw earlier, for the $8,400. And then what's left over? Who's going to get that? The employees. But they're going to get that in the future too, right? So a salary payable is created for the employees portion of what they're going to get. Okay? Let's take a look at the next part. It says prepare the journal entry to record the cash payment for the net payroll. Okay, so when that salaries payable is actually being paid out, that $454,768, it'll get debited, and then what's going to get credited? Well, cash will get credited when the employees actually get their cash. But that's not all of the transaction. Even those amounts are significant amounts being withheld out of the employees' checks. There are additional amounts that the employer also has to pay. Let's take a look at those next. So now it says, prepare journal entries to record accrued employer payroll taxes and other related employment expenses for July. It says, assume that FICA taxes are identical to those employees and that SUTA taxes, the state unemployment taxes, are 5.4% and FUTA, federal unemployment taxes, are 0.6%. That is 0.6%. So less than 1% for FUTA and 5.4% for SUTA. So to figure this portion out, we first have to take a look at all of the FICA taxes that employees paid, and those are going to be matched dollar for dollar by employers. So that $47,616 that we calculated in the previous slide, that'll be paid from employees' checks, that's also going to be paid in the exact amount matching dollar for dollar by employers. So another $47,616 gets added to that Social Security taxes payable. The amount just doubled. Half that entire payable account now is what employees contributed. The other half is what the employers contributed. Same thing is matched dollar for dollar with Medicare taxes. $11,136. Now the Social Security taxes are taxed at about 6.2% and Medicare at about 1.45% according to this slide here. State unemployment taxes payable, we saw that was the 5.4%. State Unemployment Tax Authority. And they have a payable coming to them in the amount of $3,726. 5.4% of that cap that was subject to unemployment taxes of $69,000. Now 6.6% of $69,000 is going to go as a payable to the Federal Unemployment Agency, and we have a federal unemployment taxes payable representing the amount that will be forwarded to that FUTA agency. And 0.6% of $69,000 is $414. We'll total those up, and that's the additional amount of payroll tax expense that the company has to cover these obligations. But that's not all. There's a couple of other ones too. Remember the life insurance and the medical insurance? Well, that's an additional employee benefit expense. The chart we did earlier showed that employees are paying 40% of the medical insurance and 40% of the life insurance payment. Well, who makes the other 60%? The employer does. So we take the $15,400 times 60%, and that balance is going to the medical company to whom provides the health care insurance. They'll get an additional $9,240 paid directly by the employer. As well as for the life insurance, 60% of that premium is paid by the employer, or $70,380. And we'll total both of those up together, and that gives us the additional amount of employee benefit expense that's being covered directly by the employer. So the employees had a lot of money coming out, but look at here, the employer has to pay $62,892 in more taxes, plus $16,620 in more employee benefit expenses. Let's now look at the transaction that the employer would do to get rid of all of these payables. So all of these payables were created with credit entries. We want to reverse those out with debit entries to bring those account balances down to zero. So all the credit entries will give an equal amount of a debit entry, and then we will pay all these debit entries out with a credit to cash. Let's take a look at that section now. It says, prepare the journal entry to record the cash payment of all liabilities related to the July payroll. So the FICA taxes, the Social Security taxes, remember that had $47,616 that was paid portion by the employee, portion paid by the employer. Together it totaled up $95,232. Now that was a credit to that FICA Social Security taxes payable account. To make that go away, we're going to have to give it an equal debit entry of $95,232. Medicare was doubled as well. Employees had withheld out of their Medicare. For Medicare, they had $11,136. Recall that was matched dollar for dollar by the employer. So there was a credit balance in the Medicare taxes payable account. To make that go away, we give it an equal debit balance, and $22,272 was the right number. Employee federal income taxes payable, those were amounts directly withheld. That was $192,000. That comes out with a debit entry. State income tax payable will have a balance of $43,000 on the credit side. We make that go away with debit entry as well. Medical insurance payable, remember, has to include both the employee and the employer portion, but it still has to total up to that $15,400 for the premium. The same with the life insurance premiums. A portion of that $12,300 was paid by the employees, a portion by the employers. Together they created a credit balance in the life insurance payable account for $12,300. How do we make a credit balance of $12,300 go away? Well, we're going to give it a debit for $12,300. The union's payable that was only being paid by the employees had a credit balance of $8,400. How do we make that go away? Give it a debit entry for $8,400. The state unemployment taxes payable, remember that was just paid by the employer only. State unemployment and federal unemployment is paid only by the employer. And it's subject only to $69,000 of the salaries. There's a cap that has to be paid out. So $69,000 in salaries times the 5.4% means that the state is now getting their check cut for $3,726. There was a payable called state unemployment taxes payable that had a credit balance of $3,726. How do we make that go away? Give it a debit entry for $3,726. And the exact same thing with the federal unemployment taxes, but notice the rate is different, 0.6 or 0.6%. There was a credit balance in that account, that payable account, that liability account for $414. We make that go away with a debit of $414. And then we simply total all of these amounts up, and those are the amounts that will be paid out of cash from the employer to settle all of these liabilities. So $95,232 plus $22,272 plus $192,000 plus $43,000 and $15,400 plus $12,300 and $8,400 and $3,726 and $414. Plug that in your calculator and it should come up to $392,744. Also coming out of cash with a credit entry. And what is the purpose of this last entry? To record payment of the FICA taxes, income taxes, SUTA, FUTA, union dues, and the insurance premiums to both medical and life insurance. Lots of information here on this problem. This would be a great one to go back and review. That's all for now. Thanks.